The number one reason why companies go out of business is not because they're not profitable, it's because they run out of cash. So because of this, the most common question you're going to get from the owner of the business is, how much cash do we have? How much cash do we have? How much cash do we have? So we need to be able to calculate the balance. So remember, the reason we keep this ledger, which is what we're looking at here, is simply so that we can calculate the balances of the account. We cannot calculate the balances of the account in the journal. We have to do it here in the ledger. So in this video, I'm going to show you how to calculate the balances correctly and annotate them correctly. So the process of calculating a T account's balance is technically called footing. Now, I'm never going to ask you, well, what is footing? But if you ever hear that outside of this classroom, that's what it means. So when we're calculating the balances of these accounts, for each account with more than one transaction, because if a T account has just one transaction, you don't need to calculate a balance. You can see it, it's obvious. But for every account that has more than one transaction, we need to calculate the balance. And the first step is to draw a line underneath the last number. So here I'm drawing a line underneath my last number, which is 88. And then we're going to determine the total. So you're going to get out your calculator, add the pluses. So our pluses in this case are 40,000 plus 13,000 plus 1,600. And you're going to subtract the minuses. So after we add up the debits, you would subtract all the credits. And then, and this is critical, you're going to put the balance on the larger side but below the horizontal red line. And writing BAL for balance is actually super critical. So the balance of this cash account is $49,012. Now, if you don't write the BAL, which stands for balance, or you could also write balance if you have room. If you don't write the BAL, a lot of people accidentally mistake this 49,012 as just another transaction. So then to calculate the balance, they would mistakenly add the 49,012 to the numbers above. So it's really important that you notice that the ending account balance appears on the debit side because that side is larger in this case. And of course, we calculated that by $54,600 of increases offset by $5,588 of decreases, creates a balance of $49,012. And another reason why we put the balance on the debit side for cash is because that's the normal balance. Remember, the term normal balance just means the plus side. So our last task in this project is to calculate our balances. So let's start with cash. So we're going to draw a horizontal line after the last number. We're going to add up the debits and subtract the credits. And we actually already did this in the previous slide. So we're going to write BAL 49,012. So when your boss hounds you about, well, how much cash you got, you're going to tell her we have $49,012. The next account that has, working our way down, the next account that has two transactions is accounts receivable. So we're going to draw a line. And then we're going to take the positive number, 5,500, subtract the 1,600, and that gives us 3,900. So which side are you going to put the 3,900 on? It goes on the bigger side. Also, the normal balance side for AR is the plus side. Let's see, what other accounts have multiple transactions? Accounts payable. We're going to add $25,000 credit plus $800 credit gives us a $25,800 balance. The next account with more than one transaction is the revenue account, delivery fees earned. So I'm going to draw a line under that. And then we're going to add up the pluses. 13,000 plus 5,500 gives us a balance of $18,500. So this is the solution to the ledger. So make sure, before you hand in this assignment, make sure your ledger looks like this. So again, remember the reason we have the ledger is so we know how much our balances are. So let's say your boss comes to you and says, well, thank you for letting us know that we've got $49,000 and $49,012 of cash. But how much do our customers owe us? So looking at this, how much do our customers owe us? Well, that's accounts receivable, balance of $3,900. How much revenue do we have? This one's a little trickier because the revenue account in this case is not obvious. Do you remember which account was the revenue? If you forgot, look at your chart of accounts. But the revenue account is delivery fees earned. So our revenue is $18,500. And finally, if your boss asks, well, how much debt do we have? Which of these accounts is debt? DEBT, that's accounts payable. We've got $25,800 of debt. So my last question is, do you like the financial position of this company? Well, look at cash compared to our debt. We've got a lot more cash than our debt. That's not the case with most companies. And let's see if we can eyeball the expenses and compare them to the revenue. Do you think this company has a profit? Well, remember, profit is revenues, which is delivery fees earned, minus expenses. So it definitely looks like this company has a profit. $18,500 of revenue is definitely bigger than our 4 expenses. And that's it.